Amazon's AI strategy under scrutiny. Stock plunge despite Q2 earnings beat. Amazon's earnings overview. Stock dips amid uncertain guidance and AI rivalry, despite strong Q2 performance. Updated August 1st, 2025. Amazon's profit outlook and AI initiatives have negatively impacted its stock performance recently. The company's shares experienced a 7% decline in after-hours trading. CEO Andy Jassy attempted to clarify Amazon's AI strategy during discussions with analysts. Investors are beginning to express concerns regarding Amazon's investments in artificial intelligence. Although the tech behemoth exceeded analyst predictions for the second quarter, it provided a lackluster profit forecast and ambiguous insights into its competitive edge in AI. This led to a significant 7% drop in the company's stock during after-hours trading on Thursday. For the quarter ending June 30th, Amazon reported a 13% increase in net sales, reaching $167.7 billion, surpassing the $162 billion anticipated by analysts surveyed by Bloomberg. The company's earnings per share, EPS, of $1.68 significantly exceeded the expected $1.33. However, Amazon projected its operating income for the upcoming third quarter to fall between $15.5 billion and $20.5 billion, which is potentially lower than the analysts' average estimate of $19.41 billion, dampening investor sentiment. During the earnings call, CEO Andy Jassy provided a lengthy and somewhat vague response to inquiries about how Amazon is addressing competition in the AI sector. His remarks did not clearly convey his personal perspective on the company's competitive advantages, but did reflect his optimism regarding the adoption of AI technologies. As a result, shares of the Seattle-based company plummeted by 7% in after-hours trading on Thursday. Executives also addressed questions regarding tariffs during the call. Jassy noted that the company has not observed significant impacts in the first half of 2025 and highlighted the strong results from Prime Day as evidence that consumers continue to make purchases despite potential tariff-related costs. Key takeaways from the earnings call. CEO Andy Jassy stated that Amazon has not experienced substantial shifts in customer demand or price increases due to tariffs thus far this year. The company is promoting Alexa Plus as a more advanced action-oriented AI chatbot. Amazon is also looking to compete with Elon Musk's Starlink through its own Project Kuiper satellite system aimed at providing internet access. An analyst challenged Jassy to counter the perception that AWS is lagging behind its major tech competitors in the AI landscape. Jassy's response was lengthy, but did not clarify his views on the company's competitive position in AI. However, he expressed optimism about the business as AI adoption grows. And that's a wrap. Amazon's stock has fallen by 7.4% in after-hours trading as the earnings call concludes. Jassy responds to concerns about AWS's position in generative AI. During the call, CEO Andy Jassy faced two questions from analysts regarding AI. One about whether AWS is falling behind, and another about the speed at which Amazon will launch its AI products. He provided extensive answers to both inquiries, yet neither response included many specifics about how AWS is addressing competition. Jassy advocates for Kuiper against Starlink. Jassy articulated that he views the satellite-based broadband internet market as having two main players: the established competitor, likely referring to Starlink, and Amazon, which is working to develop its own competitor through Project Kuiper. He emphasized that pricing is one area where Amazon can differentiate itself. Additionally, Amazon has established relationships with various clients, including government entities, many of whom are interested in the company's AI capabilities. Jassy acknowledged that Kuiper has faced some delays, but assured that the service is expected to enter commercial beta later this year or early next year. Potential for ads or subscriptions in Alexa Plus. In response to an analyst's question, Jassy indicated that Alexa Plus, Amazon's AI-powered voice assistant, might eventually incorporate advertising or subscription models. He explained that Alexa Plus can perform tasks on behalf of users, such as playing music or controlling lights, in a manner that most other chatbots cannot. Challenges for data centers. Jassy pointed out that one of the primary challenges AWS faces in expanding its AI infrastructure is securing sufficient electricity, while also noting that acquiring chips can be problematic. He mentioned that these issues could take several quarters to resolve. Uncertainty surrounding tariff costs. When asked about how Amazon is managing tariffs, Jassy expressed uncertainty about who will ultimately bear the increased costs associated with tariffs. He reiterated that Amazon has not seen significant effects from tariffs in the first half of 2025, but acknowledged that this situation could change in the latter half of the year. Reiterating Amazon's AI opportunities, Jassy reiterated a point he has made previously regarding AWS. A majority of IT spending still occurs on premises rather than through cloud services like those offered by Amazon. However, he believes this trend will eventually reverse as more companies adopt AWS, particularly for AI applications. He highlighted new AI initiatives at Amazon, such as Agent Core, which he claims simplifies the process of developing custom AI agents. Jassy noted that many individuals want to create agents, but often lack the necessary tools. Prime Day briefly mentioned by Jassy. Although Prime Day did not occur during the second quarter, Jassy mentioned that this year's event resulted in a significant increase in Prime memberships and record sales. He described it as Amazon's largest Prime Day ever, with the annual sales event extending over 4 days this year, double the duration of 2024's event. Minimal impact from tariffs so far. At the start of the call, Jassy stated that Amazon has not experienced any diminishing demand in the first half of the year or any significant price increases due to tariffs. He also emphasized Amazon's network of 2 million sellers, which he referenced in the previous quarter when discussing tariffs. This diverse range of sellers provides customers with numerous options for finding competitive prices. And we're off. The earnings call has commenced, featuring CEO Andy Jassy, CFO Brian Olsavsky, and Head of Investor Relations Dave Fildes. Analysts are keenly listening for insights regarding AWS's growth, Amazon's AI investments, and the company's strategies for navigating tariffs. AWS continues to thrive. Amazon Web Services, the cornerstone of the company's AI investments, maintained its growth trajectory during the second quarter. AWS sales increased by 17% to $30.87 billion, narrowly surpassing Bloomberg's analyst consensus. New offerings from AWS during the quarter included AI agents for software developers and additional foundational models in Bedrock, including one from Anthropic. AWS also secured new contracts with over a dozen companies, ranging from PepsiCo to Airbnb. Jassy highlights new AI applications. In the earnings release, Jassy showcased some of Amazon's latest AI applications from the quarter. Among these innovations is a generative AI tool that narrates product summaries and reviews to customers as audio clips, along with an option for sellers to utilize AI to enhance their product listings. Jassy also mentioned that Alexa Plus has been introduced to millions of users. Our belief that AI will transform every customer experience is beginning to materialize, he stated in the press release. Amazon surpasses Q2 earnings estimates. Second quarter results. Net sales, $167.7 billion, plus 13% year-over-year. Estimate, $162.15 billion. EPS, 1.68 versus 1.26 year-over-year. Estimate, 1.33. Online store sales, $61.49 billion, plus 11% year-over-year. Estimate, $59.13 billion. Physical store sales, $5.60 billion, 7% year-over-year. estimate $5.49 billion. Third-party seller services, $40.35 billion, plus 11% year-over-year, estimate $38.97 billion. Subscription services, $12.21 billion, plus 12% year-over-year, estimate $11.92 billion. AWS sales, $30.87 billion, plus 17% year-over-year, estimate $30.77 billion. North America sales, $100.07 billion, plus 11% year-over-year, estimate $97.36 billion. International sales, $36.76 billion, plus 16% year-over-year, estimate $34.2. A significant portion of this investment will be directed towards developing Amazon's AI products and tools. The tech giant has spent the last quarter enhancing its AI offerings, including the creation of a suite of business tools. Jassy and other Amazon executives have indicated that the returns on the company's substantial AI investments will not be immediate. Nonetheless, analysts are keen to hear the latest developments regarding Amazon Web Services AI initiatives during Thursday's call. AWS is the future growth engine, and all eyes will be on how revenue performance aligns with the increasing capital expenditures for AI infrastructure and its impact on margins, noted Sky Canavis, principal analyst at eMarketer, ahead of Thursday's earnings report. eMarketer is a subsidiary of Business Insider's parent company, Axel Springer. Amazon's competitors are also ramping up their AI investments. Microsoft has announced that its capital expenditures, which include AI infrastructure spending, are projected to reach $30 billion for the first quarter, exceeding analysts' expectations. AWS, the key to future growth, according to BFA. Justin Post, a research analyst at Bank of America, believes that Amazon's high-margin cloud computing division will be a crucial driver of value moving forward. Post will be looking for indications of AWS capacity increases that could lead to further revenue growth in the latter half of the year. Last quarter, Amazon indicated that AWS growth was hindered by chip shortages and energy limitations at its data centers. He also anticipates that Amazon's collaboration with Anthropic will significantly benefit the AWS business as the AI startup utilizes Amazon's infrastructure for its training models. BofA recently raised its price target from $248 to $265, suggesting a 14% upside from current levels. Prime Day may be mentioned, but don't expect in-depth analysis. Amazon's Prime Day sales event occurred in July, after the second quarter had concluded, so the company may not provide detailed insights into the event's financial performance. This year's Prime Day lasted 4 days, marking Amazon's longest version of the event to date. Given consumers' focus on deals amid ongoing tariff concerns, Jassy and others may briefly discuss how Prime Day performed this year. Jefferies observes strength in e-commerce. Brent Thill, a senior technology research analyst at Jefferies, noted that the anticipated impacts of tariffs and price increases have largely not materialized. Consumer demand has remained robust, and inventory levels are stable as the company heads into the second half of the year. Tariffs seem to be overstated for now, and Amazon continues to be the preferred destination for online deals, maintaining strong consumer and brand engagement, Thill remarked in a recent note. Thill sees AWS emerging as the go-to platform for complex AI workloads, indicating that enterprise customers are increasingly turning to Amazon as they seek to integrate AI into their business models. Jefferies maintains its buy rating and has set a price target of $265 for the stock, suggesting an upside of approximately 14%. Investors eager for updates on Amazon's tariff strategies. Amazon's latest strategies for managing tariffs and potentially raising prices, as many other companies have done, are expected to be a significant topic during the earnings call. Earlier this year, some Amazon customers stocked up on items that could be affected by President Donald Trump's tariffs, according to CEO Andy Jassy. He mentioned that Amazon's diverse product selection and ability to source from sellers in China provide it with a competitive advantage over other retailers, particularly in terms of offering lower prices. Jassy also noted that it remains unclear what specific impact tariffs will have on the prices of products sold on Amazon. The company's guidance for the second quarter fell short of analysts' expectations, partly due to Amazon's wait-and-see approach regarding tariffs. As another trade negotiation deadline approaches, investors will be keen to hear updates. UBS identifies Amazon as the most coiled big tech company. According to UBS analyst Stephen Ju, Amazon is emerging as one of the most undervalued companies among the Magnificent Seven. The stock's valuation was significantly revised downward during the peak of tariff volatility earlier this year, but it is now positioned for a rebound as trade agreements solidify. We believe Amazon is the most coiled among our coverage due to its extensive investments across e-commerce, AWS, content, advertising, and Kuiper, Ju stated. UBS anticipates continued growth in AI spending. Ju has raised his 2025 capital expenditure forecast for Amazon from $107 billion to $112 billion, citing improved sentiment regarding cloud infrastructure. The bank has reiterated its buy rating and increased its price target from $249 to $271, indicating an expected upside of around 18%. Amazon earnings forecast. Wall Street expects sales of $162 billion and EPS of $1.33. Second quarter estimates. Net sales estimate, $162.15 billion. EPS estimate, $1.33. Online store sales estimate, $59.13 billion. Physical store sales estimate, $5.49 billion. Third-party seller services estimate, $38.97 billion. Subscription services estimate, $11.92 billion. AWS sales estimate, $30.77 billion. North America sales estimate, $97.36 billion. International sales estimate, $34.21 billion. Third-party seller services, excluding foreign exchange estimate, plus 7.49%. Subscription services, excluding foreign exchange estimate, plus 9.68%. AWS sales, excluding foreign exchange estimate, plus 17%. Operating income estimate, $16.97 billion. Operating margin estimate, 10.4%. North America operating margin estimate, plus 5.78%. International operating margin estimate, 1.87%. Fulfillment expense estimate, $25.74 billion. Seller Amazon cloud computing results disappoint. Shares plunge 7%. In a surprising turn of events, Amazon's cloud computing performance has left investors feeling disheartened, leading to a significant drop in its stock prices. Summary of the situation. Shares plummeted by over 7% in after-hours trading. The cloud computing results fell short when compared to the impressive gains reported by competitors like Alphabet and Microsoft. Profit margins for Amazon's cloud unit narrowed to 32.9%, down from 35.5% a year prior. On July 31st, Amazon.com, AMZN.O, announced its forecast for third quarter sales, predicting figures that exceed market expectations. However, the company did not meet the high hopes set for its Amazon Web Services (AWS) division, especially after its rivals showcased strong performances that surpassed Wall Street's predictions. Following the announcement, Amazon's shares experienced a sharp decline of more than 7% in after-hours trading. Prior to this, the stock had closed the regular trading day with a modest increase of 1.7%, reaching $234.11. Profit margins under pressure. The profit margins for AWS have also seen a contraction. Amazon reported that these margins stood at 32.9% for the second quarter, a decrease from 39.5% in the first quarter of this year. and 35.5% from the same period last year. This marks the lowest margin level since the last quarter of 2023. Ken Mahoney, CEO of Mahoney Asset Management, commented, "AWS is their growth engine, and witnessing a drop in margin is negatively impacting the stock." The market was anticipating more significant developments to push the stock to new heights. AWS did report a revenue increase of 17.5%, totaling $30.9 billion, which slightly exceeded expectations of $30.77 billion. In contrast, Microsoft's Azure experienced a remarkable 39% growth, while Google Cloud saw a 32% increase. Sales forecasts and market expectations. Amazon anticipates total net sales to fall between $174 billion and $179.5 billion for the third quarter, surpassing analysts' average estimate of $173.08 billion, as per data from LSEG. However, the projected range for operating income in the current quarter appears to be on the lower side, with forecasts between $15.5 billion and $20.5 billion, compared to expectations of $19.45 billion. Both Microsoft and Alphabet have reported a surge in demand for their cloud services, which has led to increased capital expenditures. However, they also acknowledged facing capacity constraints that hinder their ability to fully meet this demand. While AWS constitutes a smaller portion of Amazon's overall revenue, it plays a crucial role in driving profits, typically accounting for around 60% of the company's total operating income. Despite Amazon's substantial investments in AI infrastructure, analysts have raised concerns regarding the absence of a robust AI model from AWS, suggesting that the company may be lagging behind its competitors in AI advancements. Dave Wagner, a portfolio manager at Aptus Capital Advisors, expressed alarm over the AWS results, stating, "Amazon's story revolves around operational leverage, and they needed to demonstrate growth relative to costs, which they have not achieved. Capital expenditures and future outlook. The largest technology firms have been ramping up their capital expenditures to expand data center capacity, particularly for the deployment and development of artificial intelligence software." Amazon indicated that its spending for the second half of the year would be similar to the second quarter's total of $31.4 billion, suggesting an annual expenditure of approximately $118 billion, which is higher than analysts' projections of around $100 billion. On Wednesday, Microsoft announced plans to invest a record $30 billion in the current quarter, while Google parent Alphabet increased its spending forecast by $10 billion to $85 billion for the year. In terms of online sales, Amazon reported $61.5 billion from its online store, reflecting an 11% increase. Additionally, advertising sales, a rapidly growing segment for the company, rose by 23% to reach $15.7 billion. Investors have been closely monitoring Amazon's e-commerce division for any indications that tariff-related uncertainties have affected consumer confidence. Recent U.S. data indicated a moderate rise in consumer spending during June. During a call with analysts, CEO Andy Jassy addressed concerns regarding the impact of tariffs on Amazon's core retail operations. He stated, "Throughout the first half of the year, we have not observed a decline in demand or significant price increases. Our marketplace features a diverse array of over 2 million sellers, each with different strategies regarding whether to pass on higher costs to consumers." He further added, "The future remains uncertain, particularly regarding the resolution of tariffs, especially in relation to China." President Donald Trump's tariffs have prompted major retailers and consumer goods companies to scramble in an effort to protect their profit margins, while attempting to maintain consumer demand. Trump has asserted that these tariffs will restore manufacturing power and jobs to the United States. Analysts have noted that Amazon's commitment to low prices, rapid delivery, and a wide variety of product categories has solidified its position as the leading e-commerce retailer among U.S. consumers, providing it with a competitive advantage over its rivals. In an effort to ensure supply and keep prices as low as possible, Amazon has been encouraging suppliers to expedite inventory deliveries. However, it has been reported that prices for goods manufactured in China and sold on Amazon.com have been rising at a rate faster than overall inflation. Additionally, Amazon has been reducing its workforce, including cuts in its AWS, books, devices, and podcasting divisions. The total headcount has decreased by 14,000 workers since the first quarter of this year, bringing the total to 1.46 million, marking the first decline since early 2024. Final thoughts. As we reflect on these developments, it raises important questions. How will Amazon adapt to the challenges posed by its competitors? Will the company find a way to innovate within its AWS division to regain its competitive edge? We invite you to share your thoughts and opinions in the comments below. What do you think about Amazon's current strategy and its future in the cloud computing market?